You're tuned back into agriculture today, and we continue our show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue talking about our different commodities, picking up on wheat, and Dan, what are we seeing domestically?
Not a lot of changes in the supply-demand balance sheet. In essence, following the January 11th or the early January wheat seedings and small grain and canola estimates for winter wheat yields that they projected average planted area at 47 million, up from just marginally from 46.1 last year, and production with yields at 50.1 bushels an acre, down from 51.2 last year, a little bit lower. Production for this year at 19.26 billion. That's down from 19.71 last year. So just marginal changes when you run through things. Really, supply demand balance sheet beyond that isn't changing very much. Feed residual, exports, uh, food usage, all unchanged year over year. We do see with the change on the supply side, production supply side, that ending stocks projected at 826 million in the new crop marketing year, 41.2% stocks to use, up uh, up from, I guess you'd say, marginally 30 million bushels from the previous year. Pardon me, the season average price projected to be $5.50, down a nickel. So still, I guess for us in Kansas, we're most concerned about hard red winter wheat. Not a lot of change there other than this ongoing issue of us being oversupplied and being trying to compete with the rest of the world, and stocks to use for the last marketing year for marketing year that ended at about 2 years ago, about 48%, 57 this year, and with what they showed, maybe whittling down that sum. But without exports really starting to move, there's just not a lot of impetus yet for movement. But Guy, go ahead on the international side.
Yeah, look, Seth Meyer's comments this morning were pretty much in line with U.S. wheat exports unchanged at 850 million bushels on a continuing competitive environment. In aggregate, Argentina, Australia, and Canada are expected to be similar to last year, so no real change there. Um, Additional recovery in European production is expected. That's after last year wheat fell to a 17-year low. And this increase in European production will offset declines, fairly significant declines in both the Ukraine and Russia. Ending stocks were raised 826 million bushels. I think you talked to that. 4% again above last year, the highest ending stocks we've seen in 5 years. That's gonna weigh on wheat prices quite a bit. And I wouldn't be surprised to see wheat more aggressively price itself into the feed ration, particularly in western Kansas, Nebraska, Oklahoma, and into those cattle feedlots here, particularly first quarter of the wheat marketing year in June, July, August type situation. So, not a real pretty picture for wheat, and it's hard to get too excited about that at all.
What are we seeing for grain sorghum?
Well,
Well, grain
uh,
sorghum's got. Go
Guy, you
ahead.
want me to do that? It's when I hit the domestic side on that real
Yeah.
quick. The planted area, 6 million acres, down 300,000 from last year. Yields back up to kind of a normal mode of 68.8 bushels an acre. A little higher production. Really, if there's a big change, is that they're de-emphasizing, consistent with what's happening now, de-emphasizing exports. This year, right now, they're projected 170 million. They took the projection for next year down to 125, and then added that reduction back to food seed industrial use, i.e., ethanol, and feed residual up about 35. So that type of shifting around, ending stocks a little bit higher at 40 million bushels, stocks to use up to 11.4%. The price down to $4 from 4.25. Guy, I think you and I were talking ahead of time, and you were commenting on the difference that's emerging between corn and sorghum prices. Do you want to talk that?
Yeah, just looking at those historical spreads, and it's reflected in price. Seen sorghum go to a pretty good discount with pretty cheap basis relative to corn, particularly across Kansas, and that's with that absence of the Chinese market there. There's been some sales on, but we haven't had any new sales, and those sales seem to have been pushed back and delayed, and that's really weighing on this sorghum price. Um, we go back 3 years, 23, 24. Sorghum, the USDA season average price was a 38-cent premium to corn. Last year, it was at a 10-cent discount. And for this coming year, it's projected to be a 20-cent discount. And I wouldn't be surprised to see that quite even cheaper. And what we're doing is, without that Chinese export market there, sorghum's pricing itself into the feed rations and into the ethanol consumption there. And we're seeing that in the numbers.
What are some other general comments you guys heard while you're up at the 101st Outlook Forum?
I got a
Well,
couple, and Guy, I got a couple, and I'll throw them to you,
yep.
okay? Big emphasis on meat production, domestic feed usage being more the future than uh, uh, than shipping grain overseas. So that was thought provoking. A guy, I heard one comment that Dowd made in particular, that we could do a number of small trade deals all over the world, but it'd be hard pressed to have them make up the difference in lower Chinese exports. So that was pretty telling to me.
Yeah, look, as China continues to improve its production practices across the board, not only in its row crops like corn and wheat, but also in its livestock area, particularly on pork, poultry, and dairy production. I would add into that protein complex of exports to China in their milk and dairy as well. China's a pretty big importer of dairy along with the beef. And while I think growth into China has stalled, um, they're still going to be a significant buyer of U.S. products potentially, but that shift in production capacity and performance is we're going to feel that in agriculture. That said, look, Mexico's our biggest corn buyer, and with the Canadians in there as well as Japan. They've come on strong this year. Um, Looking at the other comments that I sort of noted down is, look, India is going to be, I think, the opportunity, as they're the largest populous country out there. India is a hard nut to crack when it comes to trade and the way they manage their
They're
tariffs.
pretty protectionist, aren't they?
Very, very much so. And they use their import-export tariffs to manage their domestic price and supply. And that comes back, I think it was Greg Dowd that said, it's what we're going to have is a bunch of small advancements and wins in the trade area. The easy lifting has been done, thanks to Greg's efforts and Lighthizer there as well. And it's going to be a lot more challenge. And in this new environment, it's going to be a bit more strategic on that. So it's not going to be easy to grow that, but look, the world's still hungry for food and particularly protein.
I'd add one thing in also before we go to Schmidt's comment, that a lot of concern on the livestock side about screwworm coming up from South America, the need to stop that in Mexico before it gets up into the U.S. If that comes in, then you've got a lot of potential for impact on U.S. livestock herds, and the export issues are all at risk then. Guy, any thoughts on that?
Yeah, look, that animal health issue across the board, whether it's screwworm, whether it's African swine fever, or more to the point, driving this egg price higher is the bird flu. Those are going to continue to persist, and just trying to get across that animal health is key. The other thing that's interesting, particularly on the meat side of things, is the impacts of tariffs. There's quite a bit of feeder cattle that actually come across the border from both Canada and Mexico into U.S. feedlots. Mexico still also has an underlying GMO concern for corn that, while it's been temporarily resolved, has the potential to stick its head up again in trade negotiations. But that demand for animal proteins out there, it's just going to be a more difficult environment to navigate. Particularly, we're going to have to adjust to a dynamic environment where you have tariffs in place, and these tariffs are likely to change quite frequently, and managing the impacts of those as one, they get those in place and adjusted, but also as they dynamically utilize those in continuing trade relations in the future.
Dan,
Guy, how
Guy,
about go
do,
ahead,
do you
Shelby.
have something you want to add?
Yeah, I said, say, Guy, what did you hear Schmidt talk about on the
Oh,
KC Fed talk
yeah,
about?
Jeff from the Federal Reserve was fairly interesting. He gave a bit of a historical perspective. And look, I think the Fed's doing all the right moves to get inflation under control. Um, the one message he continued to state was monetary policy needs to be diversified. And I think, that Kansas City Federal Reserve is one of the most diversified ones as they allocate liquidity across the marketplace. He talked a bit about employment and, the two main factors of the Fed is to manage inflation and to manage full employment. And right now it sits at 4%. Arguably, is that full employment or not? Um, the interesting impact on particularly inflation will be fiscal spending. And one thing we've learned in the last 3 or 4 weeks is with the new administration's approach to cutting spending, slashing government excess, that's, I think, going to have probably a bigger impact on inflationary pressures, which needed to happen as we move forward. So as they sort of try to implement those fiscal spending policies, particularly Congress needs to approve those, the House particularly. It's going to be interesting how the impact that has on inflationary pressures, because I always have felt those inflationary pressures were still there in a big way from government spending.
Dan, Guy, I appreciate you both taking the time to join us today.
Very
Thank you,
good.
Shelby.
Thank you.
That was the senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Dan O'Brien. We're cutting to a short break now on agriculture today, but stick around because we have more for you up ahead.